So welcome to part 2 of our video podcast on new trends in bank responses to foreclosures. So Cora, let's open up the conversation with what are the benefits for the homeowners for some of these recent trends that we're seeing from the banking industry?
Well, John, clients have been coming into the office saying, I really don't want to pay for this house because the value isn't there. So if you've got a lender that's now willing to write down a portion of the principal balance, if I qualify, it's a humongous benefit to the consumer. Consumers are saying they're looking, those that have Bank of America loans, they're looking at, can I get in line for this opportunity? So it's a major benefit. As Shane said in the first half of our taping of this podcast, is that, now I can take care of my family. I can afford this house now. If you can write down the principal balance, and now the house is more affordable to me, and I don't mind making the payments at this point. So for the consumer, I think it's a major benefit for them. They're able now to reconcile the fact that I have a property that is worth less. They've written it down a portion of the balance, and now it's affordable to me. Right. For the lender, it's the goodwill in the community. This is something that we talked about earlier, the goodwill in the community. It's really important for them to be able to maintain these consumers in their pipeline so that they can make some monies off the client. If the property goes into foreclosure, the house is lost, they make very little to no money off of the property at all. So for the lender, the bank, by going in this particular direction and working with families and seeing that there's another alternative, a better way of being able to do it, I think it's a win-win for them as well. And I think in this particular industry, we have to be able to show, and everybody's looking for what is the win-win for all, not just for the banks, not just for the consumer, but for all. Right.
And Shane, I know with early on in this foreclosure crisis, we saw a resistance from the banks to do a lot of those principal write-downs. So what do you think are some of the reasons that they saw, in addition to what Cora was saying, some of the reasons that they saw that they're starting to adjust the way that they're doing business?
I believe that a lot of homeowners were getting educated, or called themselves getting more and more information about the foreclosure process, and then at some point the term strategic default came up, where they were determining whether me staying in this home was worth it in terms of the value of the home and what I owe on the home. And I think that the bank also looked at this and said, okay, we need to eliminate that part of that discussion or that decision possibility for the homeowner themselves. And by doing that, they take away, if you will, some of the ammunition that the homeowner may use to say, okay, that justifies them walking away from the home. Because there's an argument that can be made, and we've talked about this offline, and we've agreed and or disagreed about whether strategic default may work, and you can argue one side or the other, but at the end of the day, there's an obligation that the homeowner has contractually to be able to pay off a home. That's one argument. The other argument is that if you listen to the media and some scrupulous or unscrupulous individuals, they will talk about the strategic default as a way to be able to get a fresh start. So I think the bank kind of wants to head that homeowner off at the pass and say, look, this is what we're willing to do if we can do X, Y, or Z to help you stay in your home, help that loan stay on our books, and we make a profit. So there's the win for the bank if they embrace some of the trends that are out there.
I agree with you wholeheartedly, Shane, because the strategic default conversation is a conversation that's being had by a lot of individuals.
It's not going away.
It is not going away. So the banks have to address this particular issue and that concern. And I think these options or the strategies that many of the banks are coming up with is a method of being able to address it.
And they have to put, everything on the table, because there is, it makes sense to look at all of the possible options, good, bad, or indifferent, for the bank so they can stay in business.
Right.
We've saw the news about the number of banks that are closing down each month, and so I think this particular trend is going to help them move in the right direction.
But now you must agree. This is foreign. This is foreign to the industry.
Yes.
This is not a norm. And although consumers have been educated, and consumers are saying, my property is no longer worth the $200,000 that I contracted with you for. It's foreign for a bank to think or to wrap their brain around. let's go ahead and reduce the principal obligation that you have to me contractually. That's not a norm. And it's taken us a long way, about a year, to get to this conversation. But I have a little bit of sympathy for the bankers who are having to come to that conclusion that they now have to give up some principal because they also got had.
Right.
At the end of the day, at the time of closing, and this is a message that we have to convey to the clients that we're working with on a day-to-day basis. At the end of the day, at that loan closing, that client signed a contract for $200,000. Someone walked away with a check for $200,000, right?
Right, and in some cases, that client went and got an equity loan.
Absolutely.
When it did so we're not here to to say one way or the other which side we're on, but it makes business sense for the bank to again embrace change.
Absolutely.
And at the same time, it makes common sense for the homeowner to accept the fact that, okay, this is what the bank is trying to do to help me. We realize that this is foreign territory, but both sides have benefited and both sides are going to be moving in a certain direction.
Right. So if we can bullet point a couple of things for the counselors, how do we expect these recent trends to impact the counseling industry?
Well, John, I think in a big way it's going to impact the counseling industry. I think it's really critical that the counseling industry stay abreast of all the recent changes. So that means the status quo will no longer work.
Right.
It means that these podcasts, the podcasts that we're doing, the webinars that we're doing, the workshops that we're doing on behalf of Florida Housing Finance Corporation, counselors must stay abreast of all the changes. Many times they're not getting the information within their office. They're not Googling or they're not trying to get the information. So a structured training program is the only way that they're going to stay abreast. And we're trying to do that by way of the webinars that we're doing.
Absolutely.
It also addresses the time constraints that the counselors are having to deal with in terms of being able to get new training, whether they have to travel to it or if they can access it online. So in terms of how this impacts the counseling industry, I think those counselors that are forward thinking, they will have something to take advantage of.
Exactly.
When it comes to that.
And we talk about it a lot. It's another tool for the toolbox, right?
Absolutely.
It's just another way that the counselors can use to try to get positive outcomes for your clients. So, Cora, as we wrap up, I know that you have a personal interest in the National Industry Standards and the Florida campaign. Do you want to take a minute to address that?
Absolutely. Anytime you give me that opportunity, John, to talk about the National Industry Standards, I do appreciate it. Our goal is to get every housing counseling agency in the state of Florida approved as an adopter of the National Industry Standard. Now, we've made some headway. We've done a really good job of being able to get several agencies to sign up and to get their names on the approved list of providers and also adopters of the National Industry Standards. But we are still lacking. We don't have all of the agencies in Florida. So my appeal to you, those counseling agencies that are looking at this particular podcast, is that you sign up to be an approved provider and approved counseling agency under the National Industry Standards. And you do that by going to InCheck website. And also, you may be getting a phone call from my office, so be prepared and be ready to go when you get that phone call. So thank you for giving me that opportunity to at least put my appeal out to the counselors.
All right, and we want to thank Florida Housing Finance Corporation for sponsoring this and all of our training initiatives. That's going to bring to a conclusion our podcast on new trends in banking and bank responses to foreclosure. And we invite you, as always, to visit our website, www.onlinehousingtraining.com, for additional information.